This morning's webinar. Basically, this is part of a BNCC month-long event and specifically focused on ESG, which we call as ESG Horizon. So for this particular month-long initiative, we would like to bring you a briefing focusing in particularly what are the government incentives that is related to the ESG space as offered by the federal government in Malaysia. So we are delighted to have PwC here to come here on board to give a briefing. So just a brief introduction to our speaker here today. We have Richard Baker, who is a director and ESG expert from PwC. So Richard is a certified Green Building Index facilitator with deep knowledge and expertise on sustainability in the built environment. He is also a chartered quantity surveyor and worked in the construction industry for 6 years. Yeah, so this is before he moved into assisting clients on tax matters to identify what are the kind of capital allowances and tax deductions that are eligible for that. So just before we start, a few house rules is that if you have any questions, please submit in the Q&A section, as you can see in the bottom part of the widget there. And we start off with the presentation first by Richard, and then after that we'll get on with the Q&A session. So yeah, Richard, over to you.
Thanks, Howie, for the introduction. Good morning, everyone. Let me just share my screen. Okay, so good morning, everyone. Today we'll go through the ESG incentives and initiatives. Some was already out previously, but some have been updated from the 2024 budget back in October. So just a caveat, first of all, the incentives, there are a lot of guidelines, a lot of regulations, a lot of criteria. This session is meant to be an awareness, so I will go through some overviews of what those criteria are, but please bear in mind there's another level beyond this. So feel free to ask any questions later, but this will be an awareness and an overview, and there are more details and more criteria below this as well. Okay. So without going into actually what ESG is, I'm sure everyone joining is very familiar, but why should we actually shift to ESG in Malaysia? There are a couple of reasons why we should do this, okay? And we commonly hear the terms, the stick and the carrot, okay? The stick for people in Malaysia, companies in Malaysia, is that as a requirement of a listed entity, either on the Bursa market or the ACE market, or if a HQ of a company is listed in a foreign stock exchange, they will be required to do some form of ESG reporting or sustainability reporting, okay? That is a requirement, so it's not an option. Okay, so if anyone here works for any of those entities or has a HQ in Japan or UK, for example, where their stock exchange has a requirement, they will need to provide some reporting to them. Okay. As another one, if you are a supply chain, as part of a supply chain for one of companies, so let's say that you're supplying to somebody who is listed on the Malaysian stock exchange, producing some bricks for a construction company, for example. As part of their supply chain, they will need to report on you. So you will be required to provide them some data so they can facilitate their reporting to the stock exchange. Okay. And then lastly, it is now becoming quite fundamental as a requirement for investors or financing to provide ESG data. So you may not see this now yet, but for a lot of the banks in Malaysia, they're actually providing preferential loans or reduced rate loans if you can show your ESG or your green credentials and criteria. Okay, so at the moment, this is seen as an incentive. You know, they're giving you a reduced rate. But what we can see from the more developed countries, like the EU, they're actually doing the opposite way, where green is now a common area. And if you aren't green, they will give you a higher interest rate on your loan. So it's seen as a penalty, if you like, to say you're not green, so we're going to give you a higher percentage loan. Okay. So they're the sticks. They're the things that we are forced to do in a sense, or as a requirement. But on the opposite side, there are some carrots available. Obviously, the agenda of this seminar is on incentives, but there are other areas such as, the feel-good factor of doing something for the greater good. So there are some companies in Malaysia and across the world who are developing ESG and sustainability credentials just to be a better company, to give something back to the world and the community. Okay. For those clients or those companies in construction or property or real estate, or even those who rent from those people, we do see a demand in tenants for green spaces. Okay. So for example, we have retail clients where they want to rent out space from malls that are green certified. So I think today or yesterday, the TRX mall in Malaysia, in KL, was opened. They actually have something called a green lease, where as part of the normal rental terms in the lease, there's also a green side to it as well. Okay, so we are seeing this to become more and more. On the other side, if you are a manufacturer, we are also seeing a demand from customers where they are requiring for their products to be more green. This can obviously help that company because they can have a greater market share as they are offering something that is a unique selling point. We are manufacturing green products compared to our competitors. Please buy from us because it will help with your green agenda and your green insurance. And sometimes, as a result of that green, they're able to charge a higher sale. Also, if you're in a running businesses such as buildings, you're in a property, or if you're a manufacturer, having some of these energy efficient equipment, which saves energy, reduces carbon emissions, can also actually reduce your operating costs. Okay, so let's say that you install solar panels on your roof, you have less electrical usage demand from TNB, and so you can reduce your operational costs there. Or the equipment itself is less energy consuming, and so you also save energy there as well. So there's also that aspect to it. And then lastly, what we'll share more on this particular presentation, there are also incentives and grants to help offset some of the capex that you may incur for some of these green and ESG work that you may embark on. So moving on to a little bit more detail on the regulation and requirements of the category that we were talking about just now. The first one is the listing requirements. So any entities listed on the Bursa stock exchange or coming in the future for the ACE stock exchange, they will need to produce a sustainability report. And at the moment, this will cover some common sustainability matters. So it's already actually happening in place now. What will happen in a couple of years' time, slowly, progressively, they will increase that requirement to actually giving full TCFD disclosures. TCFD is a ESG framework. We need to report on certain targets and certain goals. Okay. One of those disclosures in the TCFD is the greenhouse gas emissions, GHG emissions, and something that we refer to called Scope 1, Scope 2, and Scope 3. Okay. So just to very quickly skip slides to explain to those who are not fully aware, this is the explanation of what 1, 2, and 3 are. So for Scope 1, it's all direct emissions from the activities of an organization under their control. Scope 2 is for indirect emissions from electricity produced and used by the organization. So if you're buying your energy from TNB, this will fall under Scope 2. And then Scope 3, the one that most companies have issue with, is all of the indirect emission activities of an organization occurring from sources that are not owned or controlled by them. For example, the supply chain. Okay. If I, as the company, buy my vegetables for my restaurant, I build buildings, and I use materials from the construction industry, all of that would fall under my Scope 3. So I need those people to provide me with that information and that data to be able to calculate my greenhouse gas emissions. 1 and 2 is fine. It's under my control. I have my own emissions. I can calculate my emissions from TNB and my energy usage. But I need that information shared from me by my supply chain for my Scope 3. And that's where the issue comes in. So this is why I mentioned particularly on listing, because although the companies that people here, you may work for companies that are not listed on any stock exchange, but you may be required to provide some data to people you are supplying to because they need it for their reporting purposes because of this scope 3 requirement. And we have actually seen now companies globally actually rejecting suppliers because of this requirement. Okay, so you can go to any big company, Apple, BMW, GE, they've all listed out that they've actually rejected using certain suppliers because they do not meet their ESG or their greenhouse gas emission requirements. They've dropped them off the list. So it's no longer a case that you don't need to do it because you're not listed. It's not important to me. Somehow, somewhere, eventually, a lot of the companies you're working for will be captured in this, particularly because of this scope 3 emission requirement. Also, something that is not quite there yet, but something that we anticipate will be coming shortly, something that's talked about a lot, is the carbon tax. Okay, so a carbon tax is a value or price tag attached to the carbon emissions that you'll produce as a company. Also, if you are a low emission company, potentially you can sell the excess of this and enable some carbon trading. Okay, so if I'm a company, I'm a very high emitter, I can buy certificates, I can buy quota from another company to offset my carbon emissions that I'm doing myself. At the moment in Malaysia, there's no specific implementation date as yet, but there is a lot of talk about this coming in, and there's a lot of evaluation and discussions going on with the government now. It has already been implemented in various countries already, so this is an established principle that seems to be working for other countries because they use this carbon tax, the revenue they generate from that, to help subsidize other areas to help the overall green agenda. On the right-hand side, you can see there, this is the Singapore carbon tax. So you can see when they first started in 2022, it was only $5 per ton of carbon emissions. Slowly, it's now increasing for 2024. Next year, it will increase to 25, 2026, increase to 45, and it intends to continue increasing overall. So the more you are emitting, the more tax you have to pay. It's now becoming a cost of business. So a lot of companies in Singapore now are looking to how to reduce their carbon emissions, whether that's their energy usage, buying more efficient equipment, operating in more efficient and green buildings, for example, or installing or procuring renewable energy compared to coal-powered energy, for example. So this is something that's already happening in Singapore and other countries. The question is, when will it be in Malaysia? At the moment, like I said, there's no details, but it's something that is being discussed quite a lot in government at the moment. And the third requirement, something maybe a few of you are aware of, it's also been talked about quite recently in the news, is the Carbon Border Adjustment Mechanism, or what we call CBAM. And this is a levy on products or goods exported to the EU. So the idea behind this is that a lot of materials and goods manufactured in the EU have to comply by these ESG or green credentials that are calibrated as part of that manufacturing process. So when people go and procure these goods, obviously they'll compare to products manufactured in India, China, Malaysia, for example, who don't have this requirement on being so green. So they can afford to maybe sell it at a lower price. So what this CBAM is there is to readjust and balance those prices out so that manufacturing products in a ESG compliant area would be comparable to those in not ESG compliant areas at the moment. So there'll be a levy on top. So they say that depending on how much carbon emissions you use as part of your manufacturing process, there'll be a calculation. And there'll be a levy increased on top depending on how much you emit as part of that process in order to balance out the sale prices from different areas. This is only for exporting goods to EU, just to be aware. Okay? So at the moment, this is implemented 1st of October 2023, there are only 6 categories listed there: cement, fertilizer, aluminium and aluminium products, electricity, hydrogen, iron and steel products as well. So if you're in this industry of manufacturing these products, there could potentially be a loss of market share if you're exporting to the EU, because now your products become more expensive once it's levies are on top. Okay. Or, as I mentioned before, with some of the listing requirements, you may be taken off tender lists, you may be struck off the procurement process because you are not compliant from CBAM or from a carbon emission perspective. So again, although not directly related to you, these are things that are happening within the world that could reduce your opportunity to do business in the EU and potentially reduce how much sales you can make for your products. Okay, so those are the kind of reasons why you may be looking towards the ESG and green criteria for your companies. So to move on to the good side, there are incentives and grants available because no doubt there will be capex required to be incurred to update your processes, your manufacturing, your buildings, for example, to meet these ESG criteria. Okay. The first one I want to raise here is that whenever we talk about ESG, the natural progress is to think that it's about environment. It's about energy usage, carbon emissions, which is true. And a lot of the emphasis is on environmental because that is the main concern. That's where we have a lot of the issues. Okay, but don't forget that ESG, there is an S and a G. Social, S, governance, G. And so there are incentives and deductions available for those two as well. For the social side, what we're looking at from an ESG perspective is diversity. You know, do you have a good balance between male and female employees, for example? Different cultures, different races, different religions. You know, is there also income equality? Is everyone getting paid a fair wage, a fair salary? Are there any significant injury rates within the workplace? You know, this may be more relevant in certain industries, maybe construction, for example, where workplace injuries are more common compared to someone who's operating an office, for example, an accountant. We also look at philanthropy, sharing, gifting, money, time, contributions. Looking at labor practices of your suppliers, fair labor practices, fair working hours, fair living conditions for those who are dormitory, etc. Okay. So on the right-hand side there, these are some deductions. This is a non-exhaustive list that are actually available in Malaysia now if your company embarks on any of these things. So there's a deduction available for remuneration paid to disabled employees. Again, from a social perspective, having that diversity, not being restricted to able-bodied employees. If you employ senior citizens, ex-convicts, parolees, supervised persons, dependents, extra dependents, there's also a deduction. Returning mothers, maintenance of child centres for the benefit of employees. Again, there's a deduction available for that. And then looking at the philanthropy area, there are deductions available if you provide donations, gifts and contributions to approved areas. So for government, state government, local authorities, approved institutions, organizations, funds, etc. So when we look at the social side, these are some of the deductions available, not exhaustive, but these are things that the government has provided to companies to deduct these from your income, and therefore you have less tax to pay. So it's a way of incentivizing companies to be able to do this. Okay. From the G of the governance side, what we look at in ESG criteria is the makeup of the board. Equality of male and female representation. Looking at shareholders' rights, your performance metrics, what is your management structure, what are the company's policies and values, what is the health and safety policy, your information disclosure, Data Protection Act, your auditing and corporate compliance, and your data security and cyber risk. So these are some of the areas for the G side that we look at from an ESG criteria. And there's some incentives to help with the cost of some of that work. there is a proposal in the budget 2024 here for ESG-related expenditure. There's a tax deduction up to 50,000 from years 2024 to 2027. So when we've clarified and asked what would that cover, things like your sustainability reporting framework, climate risk analysis, your e-invoicing, so something very, very relevant at the moment. A lot of people have questions on e-invoicing. So e-invoicing implementation is also inside there. Transfer pricing documentation, and some other ESG reporting to approved regulators. So these are eligible for the tax deduction up to 50,000. What does not qualify for this deduction, that they've clarified, is that any internal ESG report for suppliers and also any employee satisfaction surveys. Okay, so just to be aware of that. Again, as I mentioned at the start, there are a lot more criteria beyond this. This is just to give you an awareness that these things are available. Go and speak to either PwC or your other tax colleagues, your tax agent, your accountant, to get more information of the actual criteria details. So the big part of my talk now will be on the environmental side. Not to say that it's more priority than the S and the G, but just there is a lot more incentives, a lot more scope for grants and things like that, because this is where a lot of companies will be embarking upon as an initial step. The environmental side is a bit more easier to implement because it involves assets, it involves capex, which is a bit more tangible, and people can see it, they can see the benefit. So the first one is the Green Investment Tax Allowance, the GITA. I'll go through this in a lot more detail in the next slide because it's a bit more technical, but there is available for green projects, green assets, and green services. Projects and assets I'll go through later, but services is basically anyone who is providing consultancy or green. So if you're a green building designer, for example, there is a incentive available for you as a company who provide those services. There is also the EACG, which is the Energy Audit Conditional Grant. This is a grant available for quite high energy usage companies, to be frank with you, 100,000 kilowatt hours. So mainly this is involving large portfolios or large manufacturers. If you do meet this criteria, there's a grant of up to 100,000 for industrial or 60,000 for commercial. And this grant is used for you to pay an energy auditor to come and review your building. What the energy auditor will do is they will check your energy consumptions at all the various different points, and they'll come with a framework or a recommendation of where you need to improve your energy efficiency. So they may come around and say, hey, this machine A is consuming too much, it's too old, it's not efficient, please go and install this recommended asset. So this grant is there to pay for the fees that you will incur to get this energy audit, to come up with recommendations of where you need to improve your energy efficiency. And then lastly is the green financing. So as I mentioned before, there are a lot of banks in Malaysia now who have rates on loans if you can prove your green area. For example, not preferring anybody, but UOB have a one for solar panels, for example, they have one for EV cars, where they give you preferential rates for loans that you need to raise to offset the context of incurring. So the loan will be a reduced rate, obviously less interest, less cost of procuring that finance. Okay. So moving on to actual specifics of the budget 2024 and what incentives are available. The first one here is for electric vehicles. So in order to continue to promote electric vehicles, there is a tax relief up to 2,500 ringgit for individuals on the installation, rental, purchasing, including hire purchase or subscription fees for EV charging facilities. So if I as an individual want to install a charger on my residential, I'm able to claim a tax relief of 2,500 for that. Now this was always available at different rates, but it's now been extended until 2027 to continue to promote people to buy electric vehicles in Malaysia. And then from a company's perspective, there is a tax deduction up to 300,000 per EV for the rental of non-commercial electric vehicles. And again, this has been extended until YA 2027. So this is specifically for electric vehicles mentioned in Budget 2024. Now moving on to the main part of the talk, which is the Green Investment Tax Allowance, something that has been around for a while, constantly changing every year, but something that has always been around for the government to provide to offset the cost of installing some of these energy efficient or renewable assets in your properties. So this GITA is a tax allowance used against your company's statutory income. So for those non-finance people here, your statutory income is basically your income you get from your business after reducing or deducting the allowable expenses and your capital allowances. Okay. So what this means is that this investment tax allowance reduces the amount of tax you have to pay. And since typically the corporate tax rate in Malaysia for most companies is 24%, what that means is that for every 100 ringgit of qualifying capital expenditure, the company will save 24 ringgit. So it can be quite a generous incentive. And the claim is up to 100% of the expenditure that you incur for these green assets or green projects. So to share with you what the changes are, as I mentioned, it's always been available, but some changes from the Budget 2024. So currently, there's still an incentive in place now, up until the end of this year, December 2023. There are two options. There's three including services, but two here for GITA project and GITA asset. So for project, as I mentioned, it's for 100% of the qualifying expenditure against 70% of your statutory income. So what that means is that you'll be able to claim it over a minimum of 2 years. 70% the first year, 30% the second year. If for whatever reason you cannot utilize the whole incentive, you are able to carry it forward. There's no period, there's no set limit. You can continue carrying it forward if you cannot utilize it. But they give you this 3 years to be able to complete the project. So starting from your application, go ahead and do your procurement, your design, your construction, and you have a 3-year window to be able to complete that. And this project is available for renewable energy, so wind, biomass, solar, hydro, for energy efficiency, green buildings, green data centers, and waste management. Okay, so that's for for GITA project. That's under the current rules, ending this year. The changes on the right-hand side is what's from the Budget 2024. So GITA project is still available in the proposed changes, but it's now been clarified that it needs to be for business purposes. Okay, so there's a little bit more criteria to it now. They have increased the incentive for some areas, where it's now 100% qualifying expenditure as before, also against 70% or 100%, depending on which of these projects you are doing. And it's now been increased for up to 5 years for certain projects as well. The criteria of what is a project has also changed. So we now have green hydrogen, integrated waste management, EV charging stations, and renewables. So you can see quite a few of them have now been taken off the project. Okay. For GITA asset, this is for procuring specific assets. So project is looking at the whole project. We do a solar installation on the roof, and we can claim for the panel, the wiring, whole system. For asset, we are just talking about the asset itself, the solar panel, the inverter. That's it. No ancillary costs, no incidentals, just the cost of the asset itself. So for this option, again, 100% of the qualifying expenditure against 70%. And it's only available for pre-approved assets within 49 categories on the MyHijau list. The MyHijau list is a available website you can go onto now, and all the suppliers and manufacturers will register their products on there that have a green or energy star rating, for example. So you can go on there and see what kind of assets are on there. So previously, when we work with clients, we work with their suppliers to go and register to be able for our clients to go and claim this incentive. Okay. There are changes similar to a project for 2024. So now they've clarified that asset is only available for your own consumption. Own consumption meaning the company who is applying. The incentive is for 100%, same as before, against 70%. But depending on which tier, they've now reduced the qualifying expenditure to 60% for some, meaning that you're not going to get the grant for all of the costs you incur. They've now got a tiered system. The reason behind that, what we've been told, is that the items in tier 2, which are only available for 60% of the capex you incur, is because the authorities believe that these are more normal assets to have. They are part of the regular building, for example. So last time, renewable energy systems were the abnormal. Not a lot of people would install these. Now they are saying that renewable energy systems, energy efficiency are the norm. You should be doing that already without the incentive. So that's why they've reduced the capex you're able to claim. For the tier 1, they see these as something that they want to incentivize people to continue doing. They are not so well utilized in Malaysia. So they've increased or kept the 100% here as a means of pushing people to do these. Okay. So battery energy storage systems, battery energy storage is not well used in Malaysia. The technology is not that advanced yet. So they want to incentivize people to do this, to continue to push and change the technology, improve the technology, become more regular as part of a building, as part of a green building again. Not a lot of buildings in Malaysia go for the green building rating, whether that's from GBI, Greenery, or any of the international standards. So they want to promote people to get green building ratings. And the way they're doing that is by having this incentive. The only area where I can't give you any advice at the moment, sorry, is that you see here it says it can be for a list of qualifying assets provided by MOF. At the moment, we don't have that list yet. So once that's available, we can share. But at the moment, we don't have a list. The only things we can confirm is it's battery energy, green building for 100%, and renewable energy and energy efficiency for 60%. Okay. So as I mentioned before, there are a lot of criteria to this. I'll try to go through as best as I can. But there is going to be areas where I can't give you the whole detail because there's a guideline that runs up to 30 pages long. Okay, so I'll give you an overview of what's here. So as I mentioned before, previously, up until 2023, it was available for projects, whether it was for your own consumption or for your business purposes. There was no split. Whereas now, very clear, they say projects is only for business purposes and assets is only for own consumption. The good thing is they have extended until 2026. So it was due to run out, but it's now been extended. So we do have a lot more time for you to be able to consider, do your feasibility studies, and then go away and do the construction or do the project. Okay. They also had an incentive previously for solar leasing. So some companies have embarked upon this area where they will rent roof spaces from property owners. They will install the solar panels on the roof. They will incur the capex, and they will share the savings with the property owner. Okay. So companies who are involved in this solar leasing, the one who leased the roof space, were available for a tax exemption of up to 70% of their statutory income, up to 10 years. Okay. So that has also been proposed, similar incentive again, but it's now been extended until 2026. Okay, so the exact same incentive was just extended. For the green services one, as I mentioned before, this is for people who provide services involving green consultancy, green design. They're also available for a tax exemption. At the moment, though, we don't see any extension of this. That's not been announced yet. So something to look into and keep our eyes open for this. So moving on to the actual details of the green project. As I mentioned, there's different rates, different tiers for each one. So if you are embarking on a green hydrogen project, then you'll be in the tier 1, which you're able to claim 100% of your project. And depending on how much hydrogen you're producing, it will be either 70% or 100% for up to 10 years. Obviously, a hydrogen project has got a long life of trying to design it. It's not quite so familiar yet. So that's why they give you up to 10 years. Obviously, it's something very, very new. We haven't seen any people doing that yet, but something that they want to promote and adopt. So that's the reason why they give this incentive. Tier 2 is for integrated waste management. So if you're doing a composting, for example, recycling, those kind of projects, that's available for integrated waste management. Or if you're installing EV charging stations, you're a supermarket, you install it in your stores, you're a mall, you install it in the cafe. Cost of the EV charging station is an incentive. 100% of the capex can claim 100% incentive against your SI for up to 5 years. And then tier 3, this is your renewables, biomass, biogas, hydro, geothermal, solar, wind. Again, 100% of your qualifying capex, but only for 70% of your SI for 5 years. For all these 3, the application needs to go to MIDA. There's an online portal. I'll go through the process with you later, but there's an online portal. You go on there and submit your application, available from 2024 to 2026. Okay. For assets for your own consumption, again, there's a tiered system, as I mentioned before. The list of qualifying assets approved, which we don't have yet: battery energy storage, green building, 100% of the capex against 70% of the SI. For tier 2, again, another list which has not been out yet: renewable energy systems, energy efficiency. Only 60% of the cost you incur can qualify for the incentive. So this is reduced. Obviously, it's better than 0, but it was a lot more generous last time. As I said, they see these as more normal now and no need to really incentivize them anymore. The difference for key assets for own consumption is that it needs to be included and verified by MGTC, Malaysia Green Tech Corporation, whereas the previous one was with MIDA. So a little bit different in terms of how you apply for those incentives. But again, up until 2026. So in terms of the asset, obviously we don't have a list from last, but how it worked last time is that you go on the MyHijau website. Here's a screenshot here now. I took the example of chillers. So the manufacturers of all the chillers, in this case York, would go in and register their products. Obviously, they need to show that it's an energy efficient and a green certified chiller. Once they've been approved by MyHijau, they'll be registered on this website. Anybody can go there and stuff. What you then do is you click on the one that you have, you're looking to buy or you have bought, and the next screen, which I've shown on the right hand side here, will give the details, and I'll give you a model number here. Okay. This model number is the one that you have to purchase to be able to claim the incentive. And it's this exact model number. So if I have a YGWH376, does not qualify for the incentive. I need to go and speak to York and say, hey, can you go and register the 376 model so I can claim the incentive? Okay. So it's very, very specific. You make sure you match the model number as registered on the MyHijau. That was for the previous one. We don't know about next time, but should be following the same process, we believe. In terms of going into a bit more detail of what all these, what do we mean by energy efficiency and what do we mean by green building? Okay, so if you want to claim the renewable energy incentive, it's the generation of energy, steam, heat, or chill water using renewable sources. So biomass, biogas, hydro, thermal, quite self-explanatory. For energy efficiency, the definition is its use of equipment or assets which are energy efficient in comparison to the standard. Okay, so when you do your application, what they will ask you is, show me what is the normal chiller, for example, that you would install in a typical building of your size, and even what you can install before. What have you installed now? And what is the energy saving? Okay, it can be as little as 1%, as long as there is an energy saving. So either you compare to what you had previously, or if it's a new building, you compare to what is the normal standard typical building that you install, and show with calculations how much energy you have saved because of installing this energy efficient asset. Obviously, the asset needs to be registered on the MyHijau as well. Okay. For green building, we are not just giving it for any green building. It's only for green buildings that have a locally developed rating tool. So if you're going for a LEED building, which is international standard, it will not qualify for this incentive. It needs to be from local Malaysia, BI or greenery. And the last one on the right side is waste management. So things like your waste recycling, waste recovery, waste treatment, composting, collection, storage, or disposals. Any cost you are incurring for that could also qualify for the incentive. Okay, so a little bit more detail of what's inside each of those categories. So asset is quite straight. Previously the asset was quite straightforward. You go and apply, you buy the one on the Microsoft website, you make sure the model number matches, you show your invoice, you can claim the incentive. And we expect that will be a similar process for the new one going forward as well, once that list is become available. But for project, it's a little bit different. Obviously, with a lot more generous incentive, because project covers the whole system. It's not just the cost of the asset itself, it's all the ancillary and the wiring and the inverters and things like that. They require you to do a little bit more in terms of process. Okay. So for project, one very big thing to mention to you all now, you have to apply before you receive your first invoice for the qualifying expenditure. Okay, so there's a lot of planning involved here. It doesn't need to be approved, it just needs to be acknowledged. So what you'll do is just submit your application to MIDA. They will reply back saying, I've received it, I acknowledge it, and then you can then start to commence receipt of your invoices. The reason why we raise it is because you have to be very careful. A lot of clients, a lot of companies have fallen this, is that usually when you sign a contract, whether you're buying a solar panel, for example, or you're building a green building, you may, as part of that contract, be required to pay a deposit or a down payment. So as soon as you receive that invoice, without having made the application before, you're automatically ruled out of the incentive. And that has happened to people before. Okay. So it's only on receipt of invoice, not on paid, not on incurred, but on receipt of invoice. So if that supplier you are signing up with hasn't been told, she simply sends you the invoice, you can't claim the incentive. So it's very, very important you coordinate with your teams, your procurement, your project, and also your supplier to make sure you say, hey, don't send me an invoice until I've got the acknowledgement letter from MIDA. After you've then got that acknowledgement letter, you can then receive invoices. So you go away and do your work, you install the asset, you build the building, whatever you are doing as part of that project. And then you'll complete the work. And then there'll be what's called an annual verification. Okay. So usually as part of your application, you will tell them what you are doing. So you're saving energy, you're saving water, you're reducing waste, whatever it is. That calculation will take place to prove that what you planned at the start has actually been achieved physically once that project has been completed. So let's say I'm applying for renewable energy. I install solar panels on my roof. I say I'm going to generate 10 kilowatts of energy per year. The annual verification stage, MGTC, the engineers will come and check. You actually did generate 10 kilowatts of energy. And that verification will take place every year that you didn't utilize all of the incentive. So let's say that you're a very profitable company, you claim these, you can absorb the incentive over 2 years. You only have to do the verification 2 times. But let's say you, for whatever reason, your company is not so profit making, it'll take a longer time to be able to claim the incentive, let's say 5 years. You have to do it every single year. Okay. So it's something to bear in mind that it's not just that do it and leave it. You have to make sure that if you're doing a solar panel, for example, it's well maintained so that by year 5, when the check has been done, you still generate the same amount of energy as you promised at the start. Or, going back to the application, you make sure you are realistic in your aspirations and what you said you're going to achieve. So don't go and say, I'm going to generate 100 kilowatts of energy, and with no calculations, no backing, and later on it's very difficult to achieve it. You need to be realistic in your application as well. Okay. So for project previously, again, we don't see the full details yet for the new one, but it was a wider claim as you claim for all of the costs, not just the asset. Okay, so if you're doing an air conditioning system, which is energy efficient, you can claim for the aircon units, the chiller and the air handling on the roof, all the ductwork and piping, the pumps and the equipment. Okay, but it is just for the system itself, not for the labor, not for the design, not for any structural costs to improve the roof. Okay, just for the system itself. So it's a lot better than asset, but there are also some restrictions and criteria as well. Okay. So lastly, before we end off and go to some questions, just to give you a worked example. So this is taken from a client, but we've amended the models and minimized it, just to show you how a project progresses. Okay. So an example, this would be a manufacturing client. They've built a new factory. They're installing some pumps, a ventilation system, a generator, air handling unit, and a building management system. Okay. Estimated costs are all there, total about 13 million. Okay. Once we've gone through, and they've been told as part of this supplier procurement process that all of these assets are green. Okay. As part of our initial review of applying for the incentive, we actually found out that although the Kruger ventilation system, the generator and stuff are green, they have not been certified. So there's been no Cerium certificate or no Energy Star rating to prove that they are energy efficient. It's just a brochure saying that. Without that documentation, we cannot claim the incentive. Okay, so already 4 of the assets have been taken off. We cannot claim for them anymore. We can't claim for the pumps and the chiller. Okay. Once we've gone through the application process with MGTC, we actually found out that 2 of the assets have a ROI of more than 10 years. So as one of the criteria was that you could not have an ROI of more than 10 years. So what they did is they calculated the energy savings versus the capex. That was over 10 years. We had to take them away from the claim as well. So in the end, the only thing we could claim for was the chiller and the pumps and the ventilation system. I mean, still a huge amount, still 8 million, which meant about 1.9 million of savings. But you can see from the very start of 13 million, because of the criteria, because of the guidelines, because of a lot of the regulation and those details I mentioned before, we had to reduce the claim to only 8 million. Okay. And just lastly, again, I won't go through all the details available on the guidelines, but just to show you the process. So because it's a very more generous asset, there are a lot more steps and hoops and hurdles to go over. Okay. So the first one is you need to go and register your company on the MIDA portal. Put in your SSM details, for example. You then go and speak to MIDA and do your application. They'll then give you that acknowledgement letter. And then we'll say, okay, you can go away and do your invoicing and start your project now. MIDA will then go through all the information and evaluate what you've provided. Okay, so let me ask some more details on which kind of chiller you are buying, for example. Give me the model number. How many local people are you employing as part of this project? Okay, do you have any green certified engineers who are going to do the checking and maintenance for this project? Okay, MIDA will then come back and give you some questions, and they'll then give you the approval letter. Okay. The approval letter will have the effective date. So once you get the approval, your 3 years or 5 years or 10 years, wherever it is for the incentive, will start. As part of that process, they will ask for the invoices to see when the first capex was incurred. Okay. They will then give you the date to say, okay, this is the date when you're incentive. As I mentioned before, there will be a technical evaluation. So the certification, annual verification of MGTC, checking technical-wise, whatever you said you were going to achieve has actually been achieved during the construction and completion of that project. Once that technical evaluation has been approved, MGTC will issue a letter that enables you to claim the incentive in your tax computation. Okay, so there are several steps all the way through the process. A lot of backwards and forwards, a lot of questions, a lot of queries, but this allows you to claim more of an incentive. Okay, so it's something that is a trade-off. We'll give you more incentive, but we're going to ask you for more details and more criteria. Okay, so that's all I had to go through today, pretty much on time. As I mentioned before, this is supposed to be an awareness. There are a lot of criteria, a lot of details that are in this. Well, feel free to ask any questions now. I'll try to answer. But if you do have any details after that, probably best to speak to PwC, your tax agent, your accountant. I'm sure they'll also be familiar and able to help you with the more technical details of some of these incentives and grants. Okay.
All right. Thank you, Richard, for going through a very insightful and comprehensive list of incentives and what are the offerings out there, especially by the government. Okay, so this is a question from Steffi. So the question is, since these grants were launched, how has it been received? Were there many applicants every year, and is there a quota?
Yep. So if you speak to MIDA, they are inundated with applications. Okay. Mostly from solar, to be frank with you, the solar project. They do have a little bit on assets as well. But it's been quite well received, to be honest with you. Myself, have been involved in a lot of these green incentive applications. So it's something that has been quite well received, but I feel there's a lot of awareness within Malaysia itself. A lot of people are not aware that there's actually an asset in a project. They just know that there's a general incentive available. What I think is also not very well aware is those deductions I mentioned at the start, social and governance. As I mentioned, everyone keeps focusing on environmental. So there are grants, deductions available for the social side and also the governance side as well. So don't forget about those. But in terms of the green incentive itself, yes, it has been quite well received, quite a lot of applications, but mostly for solar. That's the reason why you see they reduced the QC to 60%. They want to try to promote other areas. Don't just do solar. Let's think about what else we can do. You know? So yeah, hope that answers the question.
If there's no any more question, I think we can call it an end for our session. So once again, thank you everyone for tuning in, and as well as thank you for Richard for his time and for his valuable sharing of the things that we have. Thank you for all your time, and yeah, have a nice day.
Thanks everyone. Bye-bye.
Thank you.